Welcome to Little Wild Experiences. This is my podcast, and this is your host, Zara Fernandez. Today, we're going to talk about a little bit about what's the importance of investing in real estate and the process of an application, how to get that loan, and how to finally obtain that property that you're dreaming about. So, real estate investing has long been heralded as one of the most reliable paths to building wealth from generating passive income to leveraging assets for exponential growth. The opportunities in this field are vast and lucrative. However, navigating the complexities of the real estate market can be daunting, especially when it comes to understanding the intricacies of loans and finances. But today we have two guests. Today we have Lily Kualubon. I hope I'm pronouncing that last name properly. She has been a Nashville resident for over 25 years, and she's seen the city grow tremendously. And she knew that she wanted to be part of that growth. So her passion is helping first-time home buyers overcome all the obstacles they face when trying to reach the goal of home ownership. We also have Jennifer Perez, a realtor as well that works here in Tennessee. She's dedicated realtor serving Middle Tennessee since 2001. And she specializes in Rutherford, Lewis, Bedford, and surrounding counties with 20 plus years of sales and negotiation experience. So let's give them a welcome. Hi, Lily.
Hi, thank you for having me.
Thank you. Thank you for being here. All right. I know we have Jan that probably is going to join us later, hopefully. But I just want to start with discussing like the various benefits of investing in real estate. Because I know, well, first, just tell us how long you've been um, working with mortgage loans.
Yeah, absolutely. So I have been a mortgage loan originator for 5 years. And during those 5 years, I've seen exponential growth. I have been able to the last 2 years have um a place in the top 250 for NAREP, as well as the Nashville Mortgage Bankers Association. So we've seen a lot of growth in the last couple of years here in Nashville, and it's just a pleasure to be able to be a part of that growth.
I know Nashville has been, I know my dad has been living here for, my God, I think over 10 years, and I don't think it's the same. It's been growing, and a lot of people are just moving here. So, and they're still building properties.
Oh, yeah, every day.
So, so let's just focus on so real estate. What's the importance for you as a lender? What's the importance of investing in real estate? What are the benefits of investing in real estate, such as long-term wealth accumulation, passive income generation?
You know what? I think that a lot of people don't realize that, you know, a large majority, over 90% of the millionaires in the United States are millionaires because of real estate investment. So it's very important for us to know how to put our money to work. Sometimes we want to have our money in our, 401ks or in our IRAs, or we want to have these large savings
Mhm.
accounts, but your money's not working for you. So we're spending all this time working ourselves to be able to gather more and more wealth, but our money's not working for us. It's just sitting there. But when
Mhm.
we invest in real estate, that's when we make our money work for us too. So not only are we working, but our money's also generating more money. And it's just so important for people to understand how easy it is to invest. And investing in real estate is one of the easiest things, especially if you already own your primary home. Any home after that is just so much easier to obtain. So I just love educating the community on how to invest, how to just better put your money to work for you, how to be able to build generational wealth for your children to come. A lot of us are immigrants, and we came here and we're starting from zero. So it's really important for us to be able to leave something for our children that our parents may not have been able to do for us.
Right. And I think that's probably what a lot of people who, I mean, do not have or don't have a property yet. They don't even know where to start. because real estate is, I mean, the process of obtaining a house here or applying for a loan is so complex. And then there are so many people involved. There is a lender, there is, the realtor, there is a bank, and they don't even understand what's happening and how to get approved if they need, to finance that property. Because we have investors that do, are cash buyers, and that's fine. But majority of the people don't have that luxury to say, hey, I do have $400,000 right here. So, or even more. So when it comes about applying for loans, there are many types of loan. So what are the types of loans that people can take advantage, either if it's, they're investing or they're applying for the very first time because that's the first time they're trying to get a home.
Yeah, so generally when you're, looking at purchasing a home and or investing, you want to invest in your primary residence because that's what's going to be most important. You want to have your home that you're going to live in. And we want to call that an investment as well, even though you're going to be living in it. But it's always going to be an investment because your home is always going to go up in value. So we're not going to see homes decrease in value. I know a lot of people wait or saying, oh, I'm just,
Mm,
I'm going to buy because I'm waiting for homes to go down. That's just simply not going to happen. And, you're going to be very disappointed when you realize that you waited a whole nother year. And instead of home prices going down, now they're $30,000, $40,000 more. So what you qualified for, you no longer qualify for because now it's out of your price budget. So it's very important for us to also consider our first primary residence as an investment because every year your home is going up in value. And that means that's more money in your pocket at the end of the day. So in order for us to there's so many programs, for first time home buyers that I don't have the money is not an excuse, and we help you every step of the way, every step of the way. When I was purchasing my first home, I couldn't find someone that would help me. I couldn't find someone that basically they would just tell me you don't qualify, but I never got a why don't I
mm-hmm,
qualify? How can I qualify? What do I need to do to get myself in the position where I'll qualify? And that's just simply unacceptable, which is why I wanted to get into this position to be able to help people purchase their home. And that's what we do. So initially, I like to meet with my clients. It can be via Zoom call, it can be in my office, it can be over the phone. And what we do is we'll do your initial application. So we look at your credit, we look at debts, we look at your income, and we look at all of these things. And then we tell you, okay, based upon, all of these documents that we're seeing, you are now going to be qualified for X amount. And you can start looking for homes in that price range. If you don't qualify at the moment, you'll never get a no from us. You're going to get you don't qualify right now, but if we do this and this and this, in 3 months, you'll qualify, or in 6 months, you'll qualify. So we'll always create a goal. We'll always create a plan on what we're going to do to get you to that closing table. And it's very important for people to take that first step. Many times we're afraid and we're nervous and we're like, oh, I'm not going to qualify anyway. You're never going to know if you don't take that first step. So, taking that first step is so important. That way, you get the knowledge that you need to be able to put yourself in a situation where you do qualify, or you may already qualify and you have no idea.
mm-hmm.
So,
I
that's
know, and I think it's important because a lot of people, yeah, they don't know and they don't take the first step. And then also the fact that you offer a plan, which a lot of lenders don't have the patient or don't care. Okay, you don't qualify, I'm not wasting my time with them, and they give up. But if you keep looking for the right person, then you'll find it, and the person that gives you the information. And also the fact that if you ask for certain documents, and if you're telling them, hey, this is a plan that you need to follow, then follow that plan. Because if you don't provide those documents, then, or if you don't do what you need to do, then that's when it becomes, a problem and an issue. And then you don't get that home.
I mean, we can only do so much for you. Like we can't do it for you. We can lead you every step of the way. We can show you how to get there, but we can't do it for you. So I'm happy to hold your hand while we get you there, but it definitely is going to for some people require some extra effort on their end.
What do you tell these people that sometimes, because I do have a lot from clients like, well, I'm not ready right now because high interest rate. So what is the problem with that when they hesitate to buy because of the interest rate?
High interest rates are great. People don't realize that. High interest rates, let me change your mentality. High interest rates are great. And let me tell you why. A higher rate means a lower home price, or at least you're able to negotiate that home price. So when you negotiate a home price, not only do you get a better deal, but you may get some seller concessions. So you may get the seller to get you some closing costs to help you buy down the rate. They may, give you some extras in there because you're able to negotiate. Because right now, everyone's thinking, I'm not buying because the rates are too high. Well, guess
Mm-hmm.
what? That puts you in a better position because you don't have that competition. Now you don't have 15 offers on that home. Now all they have is your offer. So they're going to give you what you're asking for because they want to sell their home. And the best part about all of this is that you don't get that high rate forever. You get the better
Mm-hmm.
um the better deal on the home, you get the closing costs, and after 6 months, once rates are lower, we can refinance. So you're not married to that rate. You get whatever rate, we want whenever you refinance in the future. So you get the best of both worlds. But let me
So
tell you what, if you
no.
wait until the rates drop, home prices are going to skyrocket. There's going to be so much more competition. You're not going to win that first offer you put in. You're not going to get any seller concessions, so they're not going to help you with closing cost. You're probably going to have to offer over asking price. I mean, and you get a lower rate, but you could have gotten that lower rate anyway, along with all the other things. So
Yeah, which makes me think, so if they're trying to wait for, okay, so let's say what will be an acceptable rate? Okay, so right now, what is it right now? 7% around that? And we
we're
are,
we're in the sixes.
okay. And then so what would be reasonable for somebody? Okay, so I want a 4%, let's say. Okay, let's say that you get a 4% in 5 months, which okay, that's being too generous. But let's say, hypothetically speaking, that's the case. So, what do you think is going to happen to the cost of the house? Is it going to go down or is it going to go up? So, the house is going to go up.
It's going to skyrocket.
It's going to skyrocket. So, if that's the case, I mean, from the lender points of view, so if the house, goes up and we have a 4% interest, what would be the difference versus buying now with that high rate?
Yeah, I mean, you get all the goodies. You get all those extra goodies. You got a way better price, so you're not so not only is your payment going to be lower because your home price was less, it's going to be even lower once we refinance and get you out of that high interest rate. So, I mean, I think that a lot of the time we're focused on the wrong things. When people ask me when's a good time to buy, I'm like, now. It's always a good time to buy now, no matter what the situation is, because you never know what can happen. You never know what's
Hmm.
going to happen in a month. You never know what's going to happen in a year. I've never had a client. Last year I helped 140 families. The year before that, it was more. But I've never had a client tell me, I wish I would have waited. But I will tell you what, I have had many clients tell me, I wish I would have bought a year ago. I wish I would have bought when you told me this was a good time. So I like to make sure we keep that in mind, is that I don't have any people that are unhappy about their purchase, but I definitely have many people that are unhappy about waiting. So
So if they want to refund, so let's say, so now, so if you get approved for whatever amount and then you buy the house, but then it's a high interest rate, what can you do later to refinance this? What is the process? What are the requirements?
yeah, so all a refinance is, a lot of people don't really know what that means. So let me kind of explain what a refinance is. All a refinance is taking out a brand new loan to cover your existing loan. But your new loan is going to be under new terms. So you may have a shorter time frame. A lot of people think, well, I've already been in this loan for 10 years. I don't want to refinance it because then I got to start all over at 30 years. No, you don't. You can start at
Mm,
You can even shorten it to 15. You can do 10 years. There's so many options, so many loan options for you to repay it back. But you can do 30 if you want to have a lower payment and just pay more if you'd like. There's no prepayment penalties on the loans that we have. Um so there's that. You could also get a lower interest rate. That's obviously going to lower your payment. There's so many options with a refinance. But all that is just taking out a brand new loan. And the way that we do that is the same way that we ask for the same things that we ask for whenever we help you with your purchase. Take out a brand new loan. We take care of that old loan, and now you have a brand new loan with maybe a lower rate or maybe a shorter term, and yeah, a new payment.
So it's like a process. It's like the same process would like if you were applying for the very first time, but
Correct.
you're already living in the house. So now let's just go to the part of investment. So let's say you don't want to buy. Some people go, well, I want to invest. Now you're telling me that real estate is a great way to invest money. So, but I don't have $1 million or I don't have $100,000 to buy a house. So, what are the options for someone who wants to invest with, I don't know, $40,000, let's say, or $50,000?
Yeah, so it's tough to say a certain amount, especially because different areas are going to have different home prices. But what I can say is you don't have to put a huge down payment. You don't have to pay it cash. Our if you're looking for an investment opportunity, meaning you're not gonna live in the home, you're wanting to purchase it to rent it out, to maybe do an Airbnb, something like that, then what most loans require is a 15% down option. So you're gonna be putting 15% down of whatever that home price is. But if you own a home and you may be like, I don't have 15% down to put on a home, and that's okay, but you have your home. So your home may already have gained value,
Mm.
gained extra equity. So now you're able to take that equity from your home and use some of that money to put down towards your next home. So this may not be money that you currently have in your bank account that you're saving, but it is money that you have in equity in your primary residence. So we're able to either do a line of credit to take some money out so that you could use it for your next purchase, or we're able to do a cash out refinance, maybe lower your rate and take some cash out at the same time. So there's so many options when I say, money should never be an issue. It just shouldn't. There's so many things that we can do, and we're going to help you through all of your options to be able to get you that investment. But Sarah, if we're going to be doing a primary residence, a lot of the time we have so many options for first time home buyers that they have to bring nothing to closing. They bring
Mm.
0% down. And especially as a first time homeowner, first time home buyer, the state provides options, the country provides options. And then we also have private groups and institutions that give you grants. So we help. We can
Mm.
help you get into a home, um, even if you have no money.
I know my dad bought a house during the pandemic and he paid only $500 at closing. But
Yeah.
but yeah, that was sweet just because at the time during the pandemic, nobody was buying houses and he got the rate for like the interest rate was 3%.
Yeah.
But you can still do it, right? But what are the requirements to qualify for that assistance? So if someone wants to take advantage of that, what do they need to do? What do they need to have, in terms of taxes, money in the bank account, credit score, and all of that?
Yeah. So, I mean, the credit scores are going to, start at 580. So you want to have a 580 and above. Anything over a 600 is going to be definitely better. But if you have a 580, we can work with that. Um, we're going to ask you for an ID, for your social security number. We're going to ask you for if you're a W-2 employee for 2 years of your W-2s and 1 month of pay stubs. If you are self-employed, then we'll ask for 2 years of your last tax returns, and 2 months of bank statements, and that's it. I mean, it's usually most of this stuff is readily available in our phones, and we're able to just quickly
Mm.
download it and be able to send it. But that's the only documentation that we require to be able to get you pre-qualified and get you in a home.
What do you think is out of all this time working with so many people, what are the main causes why someone doesn't qualify at the first time of trying an application?
Most of the time it's debts. Um, Most of the time is, we have a big car note, or we have just 15 credit cards, which, we're never going to judge you. We're just going to tell you what we need to do, what we need to pay down. Um, so yeah, most of the time it's debt. So the best thing to do when you're getting ready to purchase a home is start trying to pay off some of your debts, pay down some of your debts, so that we can use the most of your income.
Mm.
Because what debts do is they take away from our income. So now we're not able to qualify for as much because a lot of our income is going towards our debts.
And that's a good point, right? So some people still qualify, but it depends on how much money they can get as well.
Correct.
And that's not going to be enough sometimes to buy a
Correct.
house.
And also a lot of the time it's our self-employed borrowers. They may have underreported, their taxes. But there's so many other options that we have that we don't have to look at taxes. Sometimes we can just look at 1 year of bank statements. You may have not reported enough on your taxes, but you have all that income coming into your bank account. So we're
Mm.
able to look at 12 months of bank statements and calculate your income using that. We're also able to use a profit and loss statement that was created by a tax preparer CPA. And what that profit and loss statement does is tells us exactly what the name says. It tells what your profits were, what your losses were, and in total what you ended up netting, as a company. So we're able to use that in the place of your taxes. So there's so many options for our self-employed borrowers. So if you're worried about, maybe you didn't report enough on your taxes, there's other avenues that we can explore as well.
Yes, I think that's important for a lot of people because I have a lot of clients that do know have W-2s. They have a construction business or they have, anything that they work and whatever industry. And they always say, well, but my taxes, but I write off, a lot of things at the end of the year. So when you write off things at the end of the year, what happens is that you apparently make less money, right? Because you have a lot of expenses in your business, and then they take that from you. They take that income away, and it's counted as a loss. So what is the other way that they can use so they don't get discouraged? You mentioned bank statements, right?
Correct.
So how that works?
Yeah, so they just give me 12 months of bank statements. And what we do in the bank statements is we're not looking at what your balance is, we're looking at how much your deposits were, because we want to look at what your income is, so what's coming in. So we're just going to be looking at what your deposits look like to be able to calculate that income.
And in terms of credit score, when they apply with, 1099, does it change in terms of requirements, or it mostly applies as if it were a W-2?
You know what? We have so many different programs that honestly, we try to make something work for everyone. We have over 200 loan products. So what we do in that initial interview, when that initial application is made, is we determine which loan product is best for you. What is going to be catered to you specifically, because this is not a one size fits all.
Mm.
A lot of people tell me, well, my neighbor, they bought a house and they paid this much down, but my uncle, he bought a house and he put a whole bunch of money down. And every situation is so unique. Everyone is different. Our credits are different. The way we make money is different. So because of that, your loan product will also be different. So, to answer your question, yeah, I mean, same credit score is just we have to find the perfect loan product for every person, and that's my job. I don't get paid based upon how big, how much interest you got on your loan or none of that. My job is to find you the best loan possible.
Yeah, that's a good it's good to remind that to all of out there. And the thing is that if they are trying to invest, when it comes back to the investment process, how how that works when they say, because I had clients that told me, well, but I don't have any credit at all. Like I don't really have credit. So can someone in that situation can still buy a house if they want to invest?
They can, and it's not going to be, under the same ideal situation as maybe a borrower with an 800 credit score, but they absolutely can. It will be a higher interest rate, it will be a higher down payment, but we can make it happen. Or I can tell you what we need to do to get you a better credit score. We wait a couple of months and then we're able to get you um, into a loan that may be a better option for you. But if it is a zero score type of situation, we can still make it work.
And it's still, even if the interest is high, if you're investing, you're renting that property. So it wouldn't really matter that much if the numbers, click.
Especially if we know that, in 6 months or a year or whatever, we're
Mm,
going to finance it and get that payment lower. But right now, you fell in love with that house. It was the perfect opportunity.
mm.
Let's go for it, because you may not get that opportunity later on.
And also, I had a question for a client that now I'm thinking about. So when it comes about HELOC, which is the home, remind me, HELOC is home equity
And
line of credit, right? So if they do, because they're getting a loan, so that means they own money. But would that affect if that's another loan that they're going to have in their credit record? Would that affect if they're trying to get that to buy a house?
yeah, anytime that we have an additional debt, it's going to affect them. However, sometimes we have a husband and a wife, and we're only
Mm,
going to use, the husband for whatever reason.
mm,
And I always recommend, let's do the HELOC in your wife's name. That way it's not a loan that's on your credit. So there's ways that we can kind of manipulate that. Or sometimes, it's just we'll just get a bigger HELOC to put a bigger down payment, and that way that debt doesn't affect us as much. So there's yeah, I mean we try to figure out the best way possible to make that work.
So thank you, Lily. So to wrap up, can you just tell me what would be your advice for everyone who's trying to buy a house, whether for investment or to live in? What do you advise them to start doing, to start working on it in terms of paperwork, in terms of work, taxes, and all of that to make things easier when they come to you and apply for a loan?
I don't want them to do anything. I want them to take that first step and call me, because you don't know what you need to work on until we have that first meeting. So you might feel like you need to work on your debts, and you might just be fine already, or you may need to work on
Mm,
something else on your credit. So I think that the first thing that you need to do is call you or myself, so that we can start leading you in the right direction, so that we can create that plan. Because you just don't know what you don't know, and
mm.
okay, and that's what we're here for. We're here to help you every step of the way. So, my advice, give me a call. Let's do that one-on-one free consultation, and let's get you, in line to where you need to be.
And as you say, everyone is different, right? So it will be a different situation for everybody. So whoever wants to contact Lily for any advice on how to apply for a mortgage loan, so the information is right there. If they're looking, if they're watching, if they are listening to, so the number is 615-427-7390. And please tell your email because I don't want to mispronounce your last name.
Yeah, but the number is 615-423-7390. My email is going to be LKOUNLA, as in Victor, ONG, at novushomemortgage.com.
Thank you so much, Lily. I appreciate it for having, for being here and clarifying all those questions. And I hope this was, helpful for so many people that really want to buy a house, that they don't know what to do. And hopefully, they reach out to you and then finally, get approved.
Yeah, so much for creating this space that's so important to be able to help people figure out what they need to do, initially. So thank you for having me.
Thank you, Lily. Bye.
Bye.
Bye. Thank you so much for being here, whoever was, watching. And this is a recorder podcast, so it'll be there for you right there on Spotify. And you can just watch it again. If you have any questions, you can definitely reach out to Lily. Again, if you're watching this right now, her number, I'm going to repeat it, is 615-423-7390. Her email is LKOU, and it's Nancy, LAV is in Victor, ONG, at navasmortgage.com. And you can reach out to me. I'm your realtor right here in Tennessee, or you can reach out my partner. I'm gonna put if you're watching, or you rewatch this podcast later on YouTube, it'll be there. Um, so you can reach out Jennifer Perez from Keller Williams. Her number is 615-663-9264. And her email is jenperezrealtor@gmail.com. Or you can reach out to me as well. Zara Fernandez with Keller Williams, and my number is 646-667-6881. My email address is zaranashvillerealtor@gmail.com. And again, I just want to remind you that we don't sell houses, we sell investments. Our profit is your profit. We guide you through the whole process to invest in property because that's the most important thing. You need to create passive income. So you can eventually have a daiquiri somewhere in Honolulu. Who knows? Okay. So just reach out to us so we can help you. Do not hesitate. If you don't have money, do not put excuses. We help you out. We'll find a way so you can invest in real estate. And thank you again and have a great one. And I hope to have you again in the next episode. Thanks. Bye bye.